Aloha, my friends. It's great to see you guys. My name is Ryan Williams, back with another one, and in today's video, I'm going to be showing you guys how I go about diversifying my dividend stock portfolio, both by sector and by stock. In this video, I'll be talking quite a bit about diversification, and what we'll be covering builds upon the last video I put out on 3 essential stock picking rules. So if you have not seen that yet, I highly recommend watching that before continuing with this video, and I will put that video right up here for you guys. Anyway, before we get rocking and rolling, if you guys are digging the Hawaiian shirt today, please give this video a big fat thumbs up, and if you're not, leave me a comment below and just let me down easy, okay? Because I really love this shirt. All right, guys, thank you so much for doing that. And now, without further ado, let's get into it. All right, guys, now before we get into today's topic on diversification, I just want to show you guys a brief overview of my dividend stock portfolio. You know, for those of you who are new to this channel, maybe have never seen any of my videos before. And what we are looking at is my dividend stock portfolio here on my free dividend portfolio tracker that you guys can get by just clicking the link in the description of this video. There's also a video I've put together where I give you a walkthrough of how to use this if you guys want to check it out for yourselves, and I'll put that video right up here for you. But anyway, let's run through this portfolio real quick. So as you guys can see over here on the left-hand side, my portfolio currently has 17 different stocks in it, all of which pay me a dividend, and I'm actually done pretty good today, up 160 bucks, almost up 2K total, for a total gain of 9.33%. Love that. And if we scroll all the way over to the right here, we can see that my portfolio is currently valued at about 23,300 bucks. I have an annual dividend cash flow or annual dividend income of about $1,040 with a dividend yield of almost 4.5% for this portfolio. That's not too shabby if I do say so myself. And yeah, that's about it for this brief overview. Like I said, I want to keep it brief so we can talk about how I go about diversifying it. All right, now that you guys have seen my dividend stock portfolio, let's talk a little bit about diversification. And the best place to start, I want to pull up this column right here from the spreadsheet. This is column M that shows how each stock is allocated in my portfolio. Upon first glance, do you guys notice any sort of pattern or any sort of rule of thumb I might be following as it pertains to the allocation of these 17 different stocks? Take a good hard look at this real quick, okay? Maybe you guys caught it. Maybe not, either way, it's all good. So what you'll notice about this column right here and how each stock is allocated is that none of these stocks make up over 10% of my total portfolio. And you know, I have some stocks that are pretty close. I mean, Campbell's Soup is one of my biggest holdings with 8.59% of my portfolio. Looks like 3M, which is 8.53% of my portfolio, and Realty Income, ticker symbol O, is cutting it quite close, about 9.5% of my total portfolio, but none of these stocks are over 10%. Now, why is that? Let's say that every stock in this portfolio had the same percentage, had the same allocation. This would mean that each of these 17 stocks would have to make up roughly 5.88% of my portfolio. Now, obviously, I don't use this approach to diversify the stocks in my portfolio. Not every single stock, as you guys can see, is equally weighted, doesn't have the same percentage. There are some stocks in my portfolio that I prefer to be more invested in, maybe because they pay a better dividend, or maybe because I think of them as less risky, or maybe I just have a generally stronger conviction to these stocks. Now, having said that, while there are some stocks that I'm a little bit more invested in, I'm still not too overly invested into any one stock in my portfolio. And that's just because in the event that something might happen to them, I don't want to lose a big chunk of my portfolio just from owning too much of one stock. So to keep it simple for myself, a sort of sweet spot that I've implemented is just to not go over 10% of my portfolio into any one stock. For me personally, guys, I think that this allows me to have a little bit more flexibility to put some money into, you know, maybe one stock over here, maybe a little bit less into a different stock, while not getting my portfolio too unbalanced. Now, other people out there may have a different stock allocation rule that they follow, and that's totally okay. Everyone does it different. And actually, just quick pause, I'd be curious if you guys do it a little bit differently, leave me a comment below and let me know what your approach to this is. But in my case, guys, if I didn't set this kind of guideline for myself, I know I would be way too heavily invested into like AT&T, which has a near 7% dividend. or like Owl Rock Capital Corporation, ticker symbol ORCC, which has a crazy dividend. You know, I'd be just generally trying to go for that high dividend yield for all these stocks, and I'd get too crazy with it, and that's not good practice. For the long term, I think for me it's important to find a balance between having a pretty respectable dividend yield, which I think I do, 4.5% is pretty nice, while still maintaining a reasonable amount of diversification. I've made sure to throw some really safe stocks in the mix, so I'm not going too crazy and I still have a pretty high yield, so I think I'm in a good spot. And this brings me to my next point, guys. If I wanted to be really diverse, if I wanted to, make sure my account was secure, why do I only have 17 different stocks in my portfolio? Wouldn't it make more sense from my diversification standpoint to have like 30 or 40 different stocks? Yes, and that is a great point. That's very true. If I wanted to be really safe, if I wanted to be really diverse, I would add some more stocks to this portfolio. In fact, when I first started posting finance videos on this channel, I had like 22 stocks in a Robinhood account, and I had 9 other stocks in a Charles Schwab account. If you go look at my, I think my second video that's titled Inside My $15,000 Stock Portfolio, something like that. It's my second video. If you go watch that video, I'll put it right up here. You'll be able to see all the stocks I had at that time, and I think I had like 31 or 32 different stocks in total. I had about twice as many as I do now. But as you guys are now aware of, you just saw my portfolio. I've cut that in about half. I found that just having that many stocks for me was a little bit too much to manage. And to be completely frank with you, I really didn't know why I was investing into a lot of those stocks. So long story short, guys, I cleaned up the portfolio quite a bit, got rid of a lot of the bulk, and I got it to a place where I feel like for me it's quite a bit more manageable, especially with the amount of money I'm investing on a regular basis, which is just $100 a week. If I was to invest $100 into like 30 plus different stocks, I'd spread myself too thin, and I would rather focus on less stocks and be able to build stronger positions in the stocks that I own and the stocks that I actually care about and the stocks that I have actually now done the research into and figured out why I want to invest in them. And that was a huge difference maker for me, guys. Just learning how to research some of these stocks. I'm still learning about that, but I know a little more than I used to, and having that ability really helped me to have conviction in the stocks that I own, and that's why I feel a little bit more okay owning less, just because I know the stocks that I'm investing in, I know why I'm investing in them, and I have faith in them. And I think in the long term, this will greatly help decrease the turnover of the stocks in my portfolio. I definitely won't be selling out of my stocks near as much as I was when I first started. I'm holding enough stocks that I feel pretty diversified. I'm not too heavily weighted into any one single stock, and with the amount of money I'm investing on a regular basis, over time I think I'll be able to build up some pretty good positions in the companies that I own. And then, as I'm able to increase the amount I'm contributing in my portfolio, at that point I'll consider going above, maybe 20 stocks. Maybe I'll get up to 25 or 30, but I don't want to do that unless I'm able to contribute more money into my portfolio. I first just want to make sure I'm taking care of the stocks that I have and, putting money into those. And with that said, guys, it's really difficult not to add more to your portfolio because there are so many great companies out there that are worth buying into. It's really hard, to not want to own a piece of them all, and it does take some discipline to not do that. But speaking from experience, it's been much more preferable for me to not spread myself so thin. All right, guys, now that we have covered how I diversify my portfolio by each individual stock, let's talk a little bit about sectors because I do it a little bit differently. And as you guys can see right here, we're back on the spreadsheet. This is a different page. This is the diversification page of my dividend portfolio spreadsheet. And there's 2 different pie charts right here. This one shows the diversification of my portfolio by sector, and this one over here shows it by each individual stock. So for now, I just want to focus on the sectors. As you guys can see here, I have 1, 2, 3, 4, 5. I think I have 9 different sectors. I actually, as I'm filming this, I get a comment that someone said, "Boy, you better get some technology in there." And I know, but this goes back to what I was saying a moment ago. It's so hard not to want to buy every single stock. But at any rate, guys, I do diversify by sector a little bit differently. And scrolling down here, the first place I approach it is from this table right here. This shows my target allocations. So by sector, these numbers right here are the goals that I'm trying to hit for each sector. So I want to be 12.5% into communications, 7.5% in consumer discretionary, and so on and so forth. And then kind of what I do, guys, is I will then go and buy stocks just based on where these target allocations are. So I can look at utilities, for example, and I can say, okay, my goal here is to be 7.5% into utilities, but my portfolio only has about 5.25% into utilities. So I know that I need to build out the utilities a little more. And then from there, I have two options. I can either continue to buy into my pre-existing utility stocks in my portfolio, or I can add another one. And how I go about doing it is kind of like this. So sticking to the same example, talking about utilities, let's look at Southern Company right here. So Southern Company makes up 4.6% of my portfolio, and which leaves the other 0.7% for utilities in American States Water Company. This is actually a new stock that I just recently bought into because I decided, you know what? Southern Company is already 4% of my portfolio. I can either continue to build it up to 7.5%, or I could diversify a little bit more and add one more stock into my portfolio and maybe make, Southern Company 4%, and then this new utility stock maybe 3.5% of my portfolio, kind of balance those out a little bit. So not only can you diversify your portfolios by each stock, but within each sector, you can also be a little bit diversified. So I decided instead of having all of my utilities allocation be from one stock, I want to diversify a little more and add one more in there. Now, I've taken the same approach with a couple other sectors. I have two communication stocks. I have AT&T and Verizon, and this is another good example. I could have either put all 12.5% of my communications diversification into AT&T, but I know based on my rule of thumb that we talked about earlier, that 10% rule, that's not going to work. So I needed to add another stock to my portfolio. So, I didn't want to be too heavily weighted into AT&T. And I feel like just within this sector, making up about 12.5, currently it's a little bit over, but I'm close to that target, and I do like how these two are allocated in here. Now let's just look at this pie chart real quick. So for the most part, it's pretty balanced by sector, right? But there's one outlier here, and that is consumer staples. Consumer staples makes up over 26% of my portfolio, and you guys watching right now might be like, well, Ryan, that is a quarter of your portfolio. What if something happens to your consumer staples stocks? Good point, guys. So I have found, as I've kind of developed as an investor, I kind of have figured out the stocks that I like investing in, and I really, for some reason, I really enjoy investing in consumer staple stocks. To me, a lot of these stocks have a good balance between being reliable, they're pretty well-established companies, they pay a decent dividend. To me, it just has the whole package. And for those of you who don't know what consumer staple stocks are, it's going to be companies like Coca-Cola, it's going to be companies like Campbell Soup Company, it's going to be Procter & Gamble, and essentially what all of these companies do, just based on their name, they're staples, they're essential. They don't really have any cycles compared to some of these other stocks like maybe real estate or maybe consumer discretionary. They're not as much affected by the economy or stuff going on in the world because people are always gonna be drinking Coca-Cola, people are always gonna be buying Campbell's Soup, buying Goldfish, buying Late July chips. People are always gonna be using Crest toothpaste. And so for that reason, I feel a little bit better about having a higher allocation of my portfolio into this one sector. And within this one sector, I'm also very diversified. So I just listed off 3 out of my 4 consumer staple stocks. So just in consumer staples, I have Campbell Soup, Coca-Cola, Procter & Gamble, and Altria Group. And so just within that one sector, I'm pretty well diversified. And just considering these other sectors right here, if I were to, I don't know that I do, but if I were to implement another rule of thumb, I would say really, I'm taking an exception with consumer staples, but otherwise I wouldn't have your portfolio be over 20% into one single sector. I would diversify it a little bit more. But like I said, I'm taking exception for consumer staples for the reasons we just kind of discussed. So hopefully that makes sense to you guys. All right, my friends, well, that pretty much wraps it up for this video today. I hope you guys were able to gain some insight on my train of thought when it comes to how I manage my portfolio and how I go about diversifying it. I'd be curious to know if you guys follow any sort of rules or any sort of guidelines when it comes to diversifying your own portfolios? And if so, leave me a comment below and let me know how you approach it. I would love to hear from you guys on that. And if you guys want to see more of my dividend stock portfolio, check out this video right here where I go a little bit more in depth on my portfolio and give you an update on some recent purchases I made, as well as a cool little milestone I recently hit for this portfolio. Anyway, thank you guys so much for watching this video. I hope you guys have a great day, and I will see you in the next one.